Well, thanks for such a warm welcome, Raleigh. I do appreciate it, and my big thanks to TradingPub for making this available to all of you. This is a perfect opportunity I never had when I started out trading, so I hope you folks take advantage of it from all of the presenters. They're all excellent today. Let's go ahead and get started. As you see here, the title, and it seems a little outlandish, I realize, but I'm going to make a strong case for why I think you can average 2 to 4% average daily return, that's ROI, on your trading account without risking more than $100 per contract traded. As you see, the all-important subtitle there, why an objective mechanical system and professional coaching will bring you that, what I call the elusive holy grail, consistency. Well, let's get started. As you know, this is going to be recorded, so we'll go ahead and skip through that. I think it's important that everybody know that there is a requirement by the Federal Trade Commission and the Commodities and Futures Trading Commission that I'm not allowed to make promises to you about what kind of income you're going to make. This is for technically educational purposes only. And so in the spirit of that, I'm just reminding you, yep, you can lose money and there is always risk in trading instruments. So here's one final thing. If you have to leave early, write this down. If you need to reach me, there is my phone number, area code 512-267, and like Columbus, 1492. You are encouraged first, though, to schedule time with me at mguess@daytradesafe.com. That's my website is TradeSafe.com. And the reason I ask you to please email me first is I might be on the phone with someone who did schedule time, or I might be in a trade with students. So rather than just picking up the phone on an impulse, and I'd love to visit with you, please do schedule it by dropping me a line. I've unplugged the phone right now, so nobody can call me anyway. And you are definitely encouraged to visit my website. That's daytradesafe.com. It's a real simple, old-fashioned kind of site. I don't have all of the seductive things that a lot of people do. I don't even have a place for you to buy something. I don't want you to buy something from my site right away because the real meat is in my trading system and in my coaching. So I'm old school in a way. I would rather you visit with me and find out for yourself if it's a real good fit for you. And I can promise you, as you'll figure out from staying with me for the rest of this presentation, I definitely don't do any hype or arm twisting or hard sell. That's almost a rarity in this industry. I just want you to feel that you're being respected and that you can visit with me without any pressure at all. So go to the website, opt in. You're entitled to a free 1-hour coaching consultation. I'll analyze what's not working with you and your trading, and whether or not you go with TradeSafe, that's on the house. Now, who is this for today? How many of you folks now are day traders? Give me a little feedback. Let's not make this passive. I'd like you to start responding right away. How many of you are currently day trading, whether it's the minis, ETFs, equities? Give me a little bit of a response. And what are you trading? I'd like to know what instruments you're trading. Forex, okay. What else? Let's get a little feedback here. Okay, options, okay. We'll get to that too. Anybody day trading anything else? All right, stocks, the ES, great. Now we're picking up some speed. All right, and futures, mini, okay, great. Well, this is certainly for you specifically, but even if you're a swing trader, that is, you hold your position overnight for a brief period of time, anywhere from a day or more, it's for you because this is a scalable, pardon the pun, type of system where even if you enter on an intraday basis, you could parlay this into something much bigger. And for those of you who typed in options, after all, if you're going to decide what kind of play, whether you're going to buy and sell the put or call, or whether it's a straddle or something, you've got to know what the underlying instrument really is. So I'm going to show you a method where you could actually zero in on that with great accuracy. There's a lot of you in here who don't have a full-time job, or maybe you do and you're trying to get some supplemental income. Maybe you're retired and want something additional besides a pension or whatever. This can certainly provide it. And a lot of you trade all kinds of different styles, everything from trend following to breakout to channel trading and fading and whatnot. Think of what I'm going to show you today as another tool in your trading toolbox. But I'll bet this next choice here is applying to 100% of us. and I include myself, are you lacking any kind of consistency? Not just are you tired of losing, I think there's a good chunk of folks out there who are tired of losing, but you'd like to at least bring some consistency to your trading. That is very, very difficult to achieve. In fact, I call it the true holy grail of trading is consistency itself. So as you see, I think covering the waterfront here, we've got something that'll be applicable to whatever background you come from. And why am I qualified to say that? Well, aside from being the chief trader, coach, and CEO of TradeSafe, I've been, as Raleigh said, I've been day trading professionally for more than 2 decades. I've been a professional trading coach for 14 to 15 years now, and I've graduated more than a couple of thousand students who are successful traders. I have created a variety of back-tested mechanical day trading systems, and the one I'm going to share with you today has actually been in use nearly 16 years in its fundamental form. I have not had to make any major changes. And that means it's not curve fitted or over optimized. It is a very robust, white box, fully disclosed trading system. In addition to the trading side, before that, in a past life, so to speak, I was a performance coach and a therapist. And that's what I also bring to the table to assist you in maintaining that all-important critical component of consistent trading. Sure, you need a system, but you know what? If you don't have discipline, if you don't have the trading psychology under control, it is not going to work for you. So I'm certified in a variety of modalities from NLP to hypnotherapy, and I'm not going to get into all of that. I'd much rather keep moving forward and just mention to you, hang on here, just want to do one little thing off to the side. Here we go. I'd like to mention to you that today what you're going to learn is please slow down and stop chasing shiny objects. Now, events like today, they cut both ways. Now, on one hand, you're getting a lot of very useful, helpful information from a variety of professional sources. On the other hand, I get people almost every day who visit my trading room who are just jumping from one webinar to the next, one trading room to the next, and they think that they can, kind of like that old Led Zeppelin song, She's Buying the Stairway to Heaven, they think they can buy their way to trading success. I've had people tell me they've spent $40,000 and $50,000 and they're no better off than they were when they started. You're going to have to slow down and stop finally and determine what really stops you from being a consistent winner. Because if you try a one-size-fits-all approach, for example, the same exit strategy, it isn't going to work in all market conditions. You need to be able to identify what kind of market condition you have and how to adapt to that condition. So the TradeSafe system, which I'll be explaining to you as we get further into this, and please be patient. Yes, I will go to charts eventually, but I do have to lay a little bit of groundwork. The TradeSafe system achieves its consistency through precision. It is a fully rules-based mechanical system. There is no subjectivity or discretion in it whatsoever. So even if you had that, I really want to give you the greatest probability of success because, as I say, it's not a plug-and-play scenario. Yes, the system works, but if you said, well, I'll just watch the videos or read the manual, in my many years of experience, that isn't going to get you all the way across the finish line. You're going to want someone in your corner who's going to professionally coach you. So I'm your insurance policy here, folks. I don't want to just have you invest in my system. I want to be part of that equation, and I will make sure that you thoroughly understand not just how to use it. I'm going to bring my 22 years of day trading experience to the table and share that with you. And of course, we're going to go to the chart. So as I said, please be a bit patient. It may take us a few more minutes before we get there. And hang around all the way to the end because I will have a very special offer for you. Well, let's get started. A lot of what I'm going to share with you today has to do, let me slow down, is based on cycles. A lot of people say, oh, I'm not interested in day trading. I don't want to sit on my butt all day long. It gets tired and I lose my focus. It's boring, or I don't want to get overstressed. Look, folks, you really do not have to stay glued to the monitor. Part-time trading is a possibility. But you see that camcorder down below? It has a zoom lens. You can actually see the big picture and anticipate market moves and pace yourself because you can zoom in and zoom out. And I'm going to show you what I mean, and I'm going to give you a tool to do that, which allows you to adapt to the marketplace. That's because the markets are fractal. It's a fancy word that simply means you're going to see the patterns in the market, not just on the chart that you're used to looking at. You can look at any chart, anything from a daily chart, weekly, monthly, down to a 1 minute or a tick-based chart. You're going to see patterns. They repeat themselves because I know it's a cliche, but a chart is a chart is a chart. You will see that cyclical nature of the market where you see things repeated over and over again. And I'm now going to share with you some of the ratios that I use in my charts. But before I do, I have a question for you. Again, want to increase the participation amongst you traders. How many of you folks trade with just a single chart? One chart for whatever market you're following, that is. Do you just use a 5-minute chart or a 3-minute chart or an hourly or a single chart? I'm just curious. Give me a little bit of feedback, would you? Okay, let's say, all right. Several of you do just use a single chart. Okay. Well, Randy is actually helping me out here. He's saying he uses multiple charts. Well, what I'm about to teach you can be applied to the mini contracts, meaning the indices or indexes, but the electronic versions like the ES, the YM, the NQ, and the TF. That is the S&P Mini, the Dow, the NASDAQ, and the Russell. So I'm going to teach you some very specific approaches to them, but it is applicable to any other market that has a starting and stopping, an opening and closing bell. This cannot be used for the Forex because it goes round and round and round with no start and no stop. But you could create a synthetic start and stopping point. So follow along because what I'm going to show you actually can help you adapt and zero in. Use that zoom lens, so to speak. Now, Randy said, yes, he uses multiple charts. I'll bet a lot of you use the chart settings that are in whatever your platform is. Some of you use Thinkorswim, TradeStation, eSignal, Trade Navigator, NinjaTrader. There's a lot of them out there. But you know what? Not all of them will let you dial in a very specific setting. Most traders tend to use a drop down of whatever's available in that menu, hourly, 30-minute, 15-minute, 10, 5, and so on. Those are stock settings that come with a platform. What I would invite you to consider, and I'm going to give this away to you now. These are the settings I use in my own system, and you'll see how well it works. We're going to first begin with how many minutes are there in a trading day? Not around the clock, just the daytime session from opening to closing bell. Chicago pit time would be 8:30 to 3:15. I bet nobody knows. I'd be very surprised unless you've seen a presentation I've done somewhere else. How many minutes are there from open to close? Take a wild guess if you aren't sure. Anybody have an idea how many minutes from the opening bell at 8:30 to 3:15 close? Anybody? All right. Well, that's a pretty wild guess. Some of those are close, but not enough. Nope, nobody's hit it yet. Oh my gosh, that's a big number. All right, it's 405. 405 minutes is not a number that comes to mind readily, but this number is going to get you started on dialing in your charts. Here is why. I want you to take the biggest number that divides into 405 without a leftover, without any remainder. You want the biggest integer. That's going to be 135. Well, we can't day trade with a 135-minute bar chart. Of course not. But it's a starting point because I want you to take smaller and smaller multiples. Whatever's divisible into 135, that also divides into 405. And I'd like you to keep a 3-to-1 ratio. And you're going to end up with things like 81, 27, 9, 3, and 1. And those last three numbers, 9, 3, and 1, are what I invite you to consider to use for your day trading purposes for the minis. Now, obviously, you're going to be using something slightly different for the other markets depending on when they open and when they close. But try this approach. That 3-to-1 ratio is very important because that synchronizes your charts, whenever a chart, maybe an 81-minute chart, which is close to a 90-minute, hour and a half, but much more accurate. If it has a turning point, a pivot that leaves behind support, resistance, well, I can promise you that all the smaller time frames that divide into that number, they are going to turn at that exact tick and at that exact second. And this helps you navigate through the day knowing that your support and resistance levels are exactly in sync. And as you'll see, your trends, when they're in sync, can help you decide how to take trades. So besides a 3-to-1 ratio, you could even consider tick charts. Yes, you could use the classic fib or Gann numbers like 144 and 233. Well, it's just a starting point because remember, tick charts vary as far as volatility throughout the day. There's nothing sacred about those numbers necessarily. If the volatility picks up, you may need a bigger number. If the market slows down, you may need a smaller number. But they're approximations. The main thing is you are looking to create turning points or pivots that overlap no matter what the chart is. And as I say, what I've just shown you, you can apply this to other markets. Now, when you've got this to start with, you're going to do like the pros do. They do a top down at the beginning of the day, and they can keep doing top downs throughout the day as conditions change, or if they get up and go to the bathroom, answer the phone, get another cup of coffee or something, always come back and do another top down. Don't just go jump on what you think is a setup because you've lost your context. You must always orient yourself to the exact current condition. So get back in sync every time you strayed, and then identify the trend on each of those time frames, first on the 9, then on the 3, then on the 1. And when you've done that, here's what the outcome is going to help you with. You're going to end up getting strategies that enable you to pre-plan what the market is going to do. Here's how it works. If all 3 of your time frames are trending together, wow, you got a lot of follow-through potential, don't you? You could swing for the fences. But if only just some of them are trending together, you may have a weak trend. Well, maybe you don't want to swing for the fences because you might overstay your welcome. A winner might turn into a loser. So we're just getting you primed here for what's coming next. So do a top down. Do this every time you start, like this. Let's say this is a symbolic representation of a 9-minute chart. It's trending up. A 3-minute is trending down. A 1-minute chart is trending up. Neither of those charts that are side by side are trending together. What you really want is this. That's ideal. So how do you assess a setup and decide before you're in the trade, how do you want to manage and exit the trade? Because you see, too many traders, they just think about the entry. It's the exit that matters the most. Where do you get out? And most of all, too many traders, they don't think about where and when to get out until after they're in the trade. With this method, with this system, you can actually plan what you want to do before you get out, and you'll know exactly how to get out of the trade without having to guess, oh, I'll use fib, I'll use support, I'll just, trail a stop doing the seat of my pants. You don't have to do that. Here's how you would assess your potential trade. Now, the best is if all 3 of them are trending up or down. That's the 9, the 3, and the 1, and or a tick chart. Gives you the big moves. You get the follow through. That's when you're swinging for the fences. But if only a couple of them are trending together, that's your entry time frame, and the next higher, that'll be your 1 and or tick, and the 3-minute, you'll get a weaker, briefer move. So that is something that will let you know the strength of the probable follow through when and if you get a setup. All you're doing now is gauging what the market is up to so that when you do get a setup, you'll know, hey, yeah, I'm going to go for it. Because you've got a roadmap that lets you know whether you can go without any interruption or if the bridge is out and you probably aren't going to get very far. Now, using this type of approach, what kind of markets does it work best on? Because so far I haven't told you what kind of trending it is. Well, you've heard me already talk about the indices, whether it's the pit traded or whether, and it doesn't have to be the ones here in the US. It can be over in the UK, the FTSE or the German DAX. It works on all of those. If you're going to trade a trending market in the minis, I recommend either the Russell or the NAS. I personally prefer the Russell because it has the right blend of trending qualities, volatility, and volume. The NAS is good, but it's like the nickel slot machine. It just doesn't pay off that big. Uh, People say, well, why don't you trade the ES? Well, remember, I started out on futures back in the S&P, like Raleigh said, when it was 500 bucks a point. I didn't know what I was doing at that time. I was diving into the deep end of the pool. I learned quickly enough, though. But I stayed with the ES in 97 when it first was launched, all the way through the turn of the century. Makes me sound like I'm old or something. But I'll tell you what, the popularity of the ES has created a two-edged sword. If you're a trend follower, all that volume, all that liquidity has attracted some unwanted, unwelcome visitors. For those of us who are called retail traders, we don't have monster accounts in the millions of dollars. We don't want the institutions to be trading in our backyard, but that's where they are. They hang out in the ES because they're hedging their risk there. They do program trading. They do high frequency trading. They do spoofing. They have ruined the game in the ES, in my opinion. So unless you need to trade 50 or 100 or 1,000 contracts, you need to look somewhere else if you're a retail trader. And I personally, if you're trading the minis, recommend the Russell. That for me would be what I think would give you the best mix. Now, what else could you trade the TradeSafe system on? Well, if you like to trade the energy complex, most people will trade crude oil because that's what everybody hears about. You know, it's what you hear about. You're attracted to it and you think that's the right choice. But if you're a trend follower, I would highly discourage you from trading crude oil. It's more of a breakout type of market. It tends to congest a lot. It is not a trending market in the classic sense of buying dips and selling rallies, although when you get them and it's trending, the system works well. But you're going to have to wait a while because most of the time, crude oil tends to be a breakout and a fake out market, and you get beat up a lot in crude oil. What I would recommend instead, natural gas. I didn't used to care about it, but now that the volume has come into natural gas, I guess all that fracking and other stuff has been a big factor. It trends very nicely. It has the same $10 tick value as the Russell. You can use the same exit strategies as you do on the Russell. Virtually interchangeable, a little more volume in the Russell, of course. So if you're looking to diversify, you could consider natural gas is another option. I always recommend the currencies, by the way. They have a long history of being trendy. I know some of you prefer Forex. You know, I again prefer the futures version. I'm not going into a debate today about the differences, but if you're going to trade the futures version, the yen and the euro are good candidates. For a few months of this year, maybe like 6 months, they weren't doing too well. We were getting a very spotty trending characteristics, but lately they look like they've come back a bit as far as trending characteristics. So what about ETFs and stocks? Well, you can, but you know what? You got lots and lots of layers of complexity. You got tax consequences. You've got to filter out a lot of, well, what, 12,000 stocks? Which ones do you choose? I mean, it's a much more complicated form of trading. I would strongly recommend that you consider the futures. You get more bang for the buck. You don't need as big an account. And it is probably the last bastion of pure trading that I am aware of. So now that we've set the stage, let me tell you what you can expect if you decide to trade the TradeSafe system. I made that bold claim on the first slide. Yeah, you can average about 2 to 4% and sometimes more on a daily basis. That's ROI, a return on your investment, your trading account, and never ever risk more than $100 per contract based. That's not the whole trade because I don't know how many contracts you are going to trade. And this is based on whether you're going to do one of two exit strategies. You're either going to scale out or scalp. And I've got actually a variation of each of those for 4 discrete separate exit strategies. So as you see, I've got a custom tailored approach to how to handle market conditions. So if you scale out, risk is up to and including, but never more than 100. That algebraic sign is there to remind you I don't use fixed dollar stops. I use what are called adaptive or logical stops, which means you could actually risk less. And if you're scalping, it's 70 or less. So you're either going to scale out or you're going to scalp. And where am I coming from when I say 2 to 4%? So let's set the stage. If you're trading a 2-lot, obviously you need at least 2 contracts. If you're going to scale out, take some money off the table, let the rest run, right? Then I would recommend being fully capitalized. Don't try to undercapitalize yourself in day trade. I would say $5,000 would be about right. 10 would be even better for a day trading account on a 2-lot basis. So what's 2 to 4% of that? That's about $100 or $200 a day. Now, before some of you say, oh, that's lunch money, I need much bigger returns, obviously you can trade bigger. You just need a bigger account, but apply the 2 to 4% and convert that to dollars. Okay? So if you do it, what can you expect? Well, first of all, we will, as I said, start you small, pair of contracts, $5,000 account, 10 would be better. Anything more than that, your money probably isn't really working for you very well. Your daily goal, 2 to 4%. Now, how does that work out? If you were to actually trade every single day, Monday through Friday, all 4 weeks of the month, you're having 20 plus days a month. And if you average, let's say 4%, well, that's $200 times 20, that's $4,000 return. Wow, that's an 80% return on a $5,000 account. Well, before you think I'm talking out of both sides of my mouth, I've even done 200 and 300% real time with this system, but I'm the first to admit that is an aberration, and you're not likely to achieve that on any kind of consistent basis. Here's why. Well, first of all, if you retain your profits, before I give you the exception and get us calibrated here, if you retain those earnings, whatever it may be, for every $2,500 of retained earnings, so you start at $5,000, you build it up to $7,500, you can actually increase the size of your trade. Just a moment here, hang on. You can actually increase the size of your trade by a pair of contracts. So restated another way, if you went from 5,000 to 7,500, you can go from 2 to 4 contracts. Now, if you hold everything constant, you can actually achieve that next 2,500 threshold even faster because you have more buying power. And so you'd go from 7,500 to 10,000, and then you go from 4 to 6 contracts. We're not doubling, we're just adding a pair. We're being very conservative here. And ultimately, you could end up with a really ridiculous kind of return by the end of the year. We know you're not going to achieve that, so let's get over that. It isn't real. Here's why. Let's think about what is likely. First of all, I doubt any of you are going to trade every single day. Now, I'm in the room every day because that's my job as your coach. But you may have an exception. You take days off, got to go to the doctor, or take your spouse somewhere, or whatever. So you're going to trade less days. Let's say 15 days a month. And let's say that at first when you're starting out, you don't average 4%. Maybe you only average 2%. That's $100 a day on a $5,000 account. Well, that's still over $1,500 by the end of the month. That's over 30%, folks, by the end of the month. A lot of people would be very happy to have that at the end of the year, let alone at the end of the month. So what's the take home here? First of all, your return is going to vary because when I started out trading and I finally learned how to use feedback, I calibrated myself, I tracked my performance. I didn't just look at the end of the month and say, oh, my equity curve's going up, I'm making some money, or no, it's down, I'm in drawdown. Those are broad strokes. You need the kind of precision feedback that lets you change course, just like an autopilot in an airliner keeps you on course. So in our course, the TradeSafe course, I'm going to provide you with the tools that let you calibrate. So it's first, this new thing called calibration. You may not look very good as far as what you're doing, but you can make actual adjustments to what you're doing because everything is systematized. So now that we have this as the groundwork, I'm actually going to go straight to the charts. Now this is going to be a little bit of a challenge because I'm not used to Novia. I'm used to a different conference room technology. So I'm going to somewhat unprofessionally switch to a different application, the charts themselves. And in order to do that, it's going to look a little clunky, so bear with me. All right, we're going to minimize this, and there are the charts. All right. So everybody should be able to see the charts. And so you don't just ask, well, what is that? Like, is something magic about the platform? Well, I happen to like this one a lot. It's called NinjaTrader. I was one of the original beta testers back in the early 90s with TradeStation before it was called that. It was called System Writer. But we're using NinjaTrader here for this presentation. And I'm not going to get into the details here of every minute thing, but even though I might use more than one screen, I can only show you my desktop, which is limited to the main monitor. So I brought all my charts together in one monitor. And the 9, 3, and 1 are as follows. First, let's close this little data box. My 9-minute is here, my 3-minute is there, and dead center is my 1-minute. Those are the main 3 charts. And as I said, you can supplement your entries to get additional setups with the tick charts. There on the top right, there's the 233, and below it is the 144. Here is a 9-minute chart fully maximized, a fairly clean chart, right? It's not candlestick theory, so let's get that out of the way. I only use candlesticks just because they're easy to see, so I'm not going to tell you to look for hangman dojis, morning stars, and stuff like that. We have a moving average on there. It's not essential on this chart. It is essential on the entry time frame, but there is a tendency in the markets to what is called regress to the mean or pull back to the average. I also have these vertical dashed lines. These are session breaks that shows the end of one session and the beginning or opening of the next one and the next one and so on. These charts, this 9-minute chart rather, is a day only chart. It opens at 8:30, it closes at 3:15 Chicago pit time. There is no overnight trading here. I filtered out the overnight noise for a reason. The other charts I'll show you do show round the clock trading. What else is on here? We have these little pivots or swings indicators that show support and resistance levels. There's resistance, there's support, support, and so on. Down below we have an oscillator, the red line. I'm not going to say exactly what it is. It's semi-proprietary, but it started out life as an off-the-shelf indicator. But what is hiding behind it that keeps changing color, that is proprietary. It is our master trend indicator. And it uses 2 separate methods of determining trend. So if you're in an uptrend, it'll show you a change to a downtrend. Like green right here was an uptrend, it went into a downtrend, and then it switched to an uptrend. Now, what are those color bands that are separating the green and the rose colored? Those 2 different colors, crimson and slate, and occasionally you'll see a black one. The black one simply means both methods signaled on the same bar. But each of these separately show one method. This is a break of support or resistance with follow through. That's as old as dirt, except instead of a subjective discretionary approach, oh yeah, we broke support, we're in a downtrend. Hey, if you've ever tried that, you know sometimes it bounces back and you got faked out. This uses very specific metrics and confirmation technology. Right here, this is our crossover method. And it does use indicators, whereas the other method didn't. It uses market structure. Whichever one signals, I'm going with that signal. It's a change of trend from up here to down, and that's just independent confirmation for more down, and so on and so forth. Now that we've got that, we're going to go ahead and go to the 3-minute chart. And it is around the clock right there, okay? So here we are on a 3-minute chart, and here's the open, the vertical black dashed line. It's showing as we spread it out a little bit more that, hey, we went from an uptrend, and there's the gray showing that we had a break of support right there with follow through. That's part of the process, which is spelled out in the system, and all the math is done. You don't have to figure it out. It's all done by the indicator. It's saying we have just switched to a downtrend. And once that bar is closed and other bars form, it'll stay the color of rose, which meant downtrend earlier. But right now we haven't gone into the next bar, so the rose hasn't yet showed up. So the 9 was down. The 3 is down. Let's see what the 1 minute is doing. It's also down. It's already made its change and has stayed in a downtrend. It's rose colored. So here we are. We're in a downtrend across the board. As they say in that movie with Brad Pitt, Moneyball, if you ever saw it, he was the manager of the baseball team in Oakland, and he didn't have the budget to afford A-Rod or any of the star players on the Yankees team. He said, well, we're going to use statistics, and all we're going to boil it down to is what works. And he came up with two basic rules. And he said, rule number 1, strike out as little as possible. Rule number 2, just get on base. Well, that's not very complicated. Well, I'll tell you what, the TradeSafe system is a capital preservation-oriented system. We try very hard to lose as little as possible, as infrequently, and when you do lose, as little amount as possible. So I'm saying basically, lose as little as possible, rule number 1, and rule number 2, just be consistent. Just try to have consistency in your results. That's my equivalent. Well, right now in this setup here, we don't have a setup yet, but in the laying the groundwork, we have trend agreement. All 3 time frames, the 9, the 3, and the 1 are trending down in this example. Well, that means you got a lot of wind at your back. If you get a setup, you're going to want to swing for the fences. Otherwise, if you had a weak trend, you'd bunt and just get on base, right? So we're looking for a pullback now. That's step 2. The 4 steps to a trade-safe trade are as follows. Step 1, determine the trend across all the time frames. And that, my friends, is what is going to inform you about whether or not you're going to swing for the fences and scale out, or whether you're going to just have a weak trend and maybe just bunt, and that would be a scalp. It'll let you know. And that's how we have these automated exit strategies waiting for us over here in Chart Trader. I'm choosing a scale 100, which in advance I'm going to set it up so that when I get into the trade, I'm going to take money off the table when I reach a $100 target. In the process, I'm going to hedge my bet, because I really don't like to lose. Who does? When a certain condition is met, an algorithm will kick in and it will move my stop to break even in 1 tick of profit. Hands off. I'm not even touching it. It's automated. It'll do it faster than you can do it with the mouse, and it'll be totally consistent. So that's what we're up to here. We're going to get this trade started. After we've got the trends, we're going to look for a pullback to this moving average. I'll tell you what the setting is. It's 21, and it's an exponential. And then we're going to look for independent confirmation down below right there to see if we get into overbought. I don't want to put all my eggs in one basket and just look for a pullback. And last of all, step 4, we want to determine the risk. Make sure it's not over 100 if we're going to scale out here, right? So let's get started. I'm going to pick up some speed here so we can finish on time. I'm going to get it going at about 20 times normal speed. And when it gets close to a setup, I'll slow it down. Now we have very specific metrics here in the TradeSafe system. Everything is real precise. You'll know when you're getting a legal pull. For example, right now, I'm going to pause. Now we have rules about how many bars must be in the pullback as a minimum. We've got to have a direct angle. We can't have it meandering around. And we've got to be within a certain tolerance. What if it didn't touch the 21? You would assume it would have to. Sure, that would be best, but what if it didn't quite make it? What if it overshot and blew past it? There is a tolerance that's in here. Where do I look for that tolerance? Down here, where it says Rule 21. Right now, when I click to the right of this current bar, it's saying I'm 1 tick away. Well, I'm not going to give away the system's setups, but I am going to tell you that we are within tolerance here. So already steps 1 and 2 are fulfilled. What about step 3? Well, we're already overbought, so that's already handled. What about the risk? As we have 49 seconds left on this 1-minute chart before I park my order, I want to know what the risk is. Look back in the data box where it says risk amount. Instead of guessing what the risk is, and I told you already, we don't use fixed dollar stops. They're variable stops. It depends on the size of the bar, up to 100. Right now, the risk is $40, and that indicator is smart enough to know we're trading the Russell at $10 a tick, that we're trading 2 contracts. It knows exactly where we're going to park our order when we do, and it knows once we get in the trade where we're going to put our stop loss order. And it figures all that out on a per contract basis, moment to moment to moment for you. So there it is down here. All of these indicators are doing this for you automatically. So what I'm going to do is start this back up, and we're going to wait and see. I'm going to keep my cursor one tick below the low of this bar at all times because I'm going to enter a sell short order for the 2 contracts on a stop limit order. So I get 0 slippage, and I'm going to make the market prove itself by trading through my order. And I'm going to wait till the last 5 seconds to park my order. So this way, you're letting the market prove itself while it snaps back. You're not going to chase the market, and you get 0 slippage. This is the way to trade, folks. You're getting it at a cheap, cheap price, and you're basically catching it on the pullback as it snaps back in the direction of the trend rather. So we're getting ready to put the order in the last few seconds. And the lady said, order pending. You really can't hear it, but she's talking to me. That's programmed in. And let's pause for a second. How many of you in here know what an OCO is? Order cancels order. Anybody? Type a Y if you do. One cancels other, or order cancels order. All right. Well, some of you do, some of you don't. What it means is that, hey, we've got a target, and I've got the target already right here. This chart trader feature, all I did was click directly on the chart to park my order. Once it was filled, that stop limit was filled, we have a target here at $100. There's my stop loss order up here. It's very graphical. It's very easy to see. And watch what I do. We're going to actually reduce the risk from $100. That's where we entered here at 1067.5. And up here is the stop at 1068.5, $100 at $10 a tick. Bring it down and back off a tick. Look at the reward risk ratio already now. Much better, wouldn't you say? And when we get down most of the distance, I'm not going to say what the algorithm is, but when we're virtually there, you're going to see another thing happen. This stop will get canceled and replaced or moved to 1 tick of profit, so that if we didn't make it to the target, we've hedged our bet, yet we didn't choke off the trade. And if the market came back, it would just scratch basically, and you pick up a tick of profit for each of 2 contracts. And that would mean that you made at $10 a tick on each contract, you had a $20 winner. That's a lot better than a loser, isn't it? So let's see what we did get. I'm going to speed it up a little bit more, and then I'm going to try to slow it down when we get close to the condition where the algorithm will move the stop. Now watch the red line where the stop is, and it's going to get moved to just below where we entered. I'm going to try to hope that this comes down in the next few seconds. I don't know if I'll be able to catch it in time. There it is. See, your stop just got moved from up here to here. You're still protected for both contracts. You're in a can't lose situation. You've just hedged your bet. Isn't that sweet? All right, not only that, and this is automated, folks. I'm not doing this myself. This is the system. It's pre-programmed. If we do make it to the target and scale out, watch what happens next. Target filled, said the lady. Again, I have my volume turned down, but the system talks to you and lets you know what's going on. And after we scaled out right here, you can see the little left pointing diamond. We made $100 on contract number 1. Notice the stop back here isn't for 2 contracts anymore. The system updated it and said, hey, we only need 1, and it changed it for you. So we're in what's called a bracket right now, or were before when we hadn't hit the target, so that if one or the other were hit, the other was straight canceled. Now that we've hit the target, all we're going to do now, folks, is enjoy the rest of the trade. You've made $100. That's closed profits. It's in your pocket. They can't take it away. So what are you going to do to trail your stop? How do you know where to get out? What if you had something that showed you where to get out? A true trailing mechanical stop. Now, it's not going to actually move your stop for you like you saw there, but watch what it does. I'm going to point out an indicator that is going to appear, and when it starts to get past where your stop is sitting, here's our stop right here. This indicator right there, it plots where, once you're past the stop, where you want to start moving your stop, moving your stop. And there's a little tip, little trick. We're going to always not put our stop at where the plot point is once it gets past. We're going to always back off 1 tick. So right here would be back where we started. When the next one appears, let's pause when it does. You would not be moving your stop to 1067.1. you'd put your stop at 1067.2. There's a reason for times with this indicator, and this is not what you think it is. It may have started out life as what you might think it is, but it's been definitely re-engineered for a different purpose. And this is what you're going to base your trailing stop on. It is like a surface-to-air missile. It changes its vectoring based on the rate of descent, how fast things are moving, or whether the market is stalling or backfilling, because if it does, it'll rush down and lock in more profit for you. Right now it's hanging back, but see, the market is starting to go into chop. Watch what happens as we pick up speed here as I turn things back on. I'm going to stay at 20 times normal speed. This is not how fast the market trades, but you see, I would actually move that red line every time a plot point happens. Backing off one tick, I'd be one tick above the blue dot, the plot point, and a lot of people, frankly, they would have gotten out somewhere around here because they said, uh-oh, it's not going anywhere. Let's pull the plug and take what we got. But you would have missed the rest of this. You would have missed what we can get here if we keep going. I'm going to speed it back up again to 20 times. And again, I'm not moving the stop physically in the interest of time so we finish on time, but you have a full minute, folks. Every time a 1 minute bar finishes, you'd move your stop. So as you see here, as price started to backfill a little bit, this started locking in more and more and more profit. Now you're not out. Remember, we back off a tick. So we're still in this trade, still in this trade. So I'm going to try to start to slow it down when it looks like we are going to finally get taken out. As soon as it looks like it's going to start coming back a little bit, because I don't want to miss this. There are 2 or 3 places where a lot of traders would have gotten out. But mechanically, you don't need to. All right. Right here, it looks like it would take you out if it went that 1 tick extra. So that's at 1064.9. So we're going to bring our stop this time down to there. Normally, you would have been moving it every time a bar finished, every time, every time, every time. So let's see what does happen. And you couldn't hear her because my volume is down, but the lady said stop filled. So I'm going to invite you folks. I want you to type this out so you can let me know how much you think you made on your trade here. We sold, write it down, at 1067.5. We exited right here where the left pointing diamond is at 1064.9. Subtract the small number from the big number if you do know how to do subtraction. And every tick, every decimal place is worth $10. Take that dollar amount, and remember we scaled out on the first contract, you made $100. Add 100 to that figure and type out, tell me, show me how much you think you made on your trade here. How much do you think you made? Let's see if you're participating and paying attention. How many people can do that? Come on, folks. That's just second grade math. $1, $275, $500. What else? $2,700. Oh my. Okay. No. Remember, it's $10 a tick, folks. And when you subtract the small number from the big number was, and I'm not going to have you do it all over again, 1067.5 minus 1064.9. And you convert that to dollars and you add 100 from where you scaled out. Here's your profit in the top corner. When I reopen Chart Trader, you made $360 on that win. That's on a 2-contract basis, folks, and you didn't have to think about it at all. It was automated. All you had to do was follow the rules, were specific, mechanical, down in the data box, and put yourself in. And after that, the automation took over. So tell me, would you like to be able to get that kind of consistency? I'm not saying every trade's going to make hundreds. Some of them are only going to make 60 or 100 or something like that. But do you like, give me a little feedback. Let me know if you like the idea of a real mechanical system where you don't have to guess and say, well, that's close enough. You will know absolutely that it really is this way. So I'm going to make a little switch here. So bear with me. I'm going to park this chart back into what I call the dashboard where you see everything. And we're going to make a switch here to today. This is going to switch from replay, which I had been doing. And I'm going to show you today's trades. I don't have a lot of time, so I'm going to have to really pick up speed here. And as soon as it logs in right there, I'm using CQG with NinjaTrader. I will show you the trades we had just this morning. I don't have the records on this afternoon, but I want to show you what we did this morning. I'm waiting for this to connect. I hope it does. Well, thank you. I appreciate that. Nice thoughts coming from some of you. Well, I don't know why I'm not getting the connection here, because I really wanted to brag on the system. Yesterday, we made over 14% in the afternoon part of the session when the price move surged upwards. And this morning, we made close to 9%. All right, here we go. It's finally connected. And what I'm going to show you after everything shows, oh, I've got to change contracts. Of course, that wouldn't hurt to do that. We're going to go to the December contract. Duh. All right, and I'm actually going to open up first the 9-minute to show you the overall day that we had today. This was today's trading. Come on, why did it not, there we go. Okay, there we go. This is today. Here was the open. We had a sell-off, a retracement, another sell-off, another retracement, and a sell-off. And in the morning part, before lunchtime, is what I'm going to show you. And I'm going to show you some trades we took on a tick chart, not just the 1 minute. Sometimes you don't get setups on the 1 minute if the market's moving too strongly, but these tick charts will capture it. And we're going to go back to the open. And here were our setups. Our first setup was right here. Now, when I click on this, that was at 8:47 this morning on the Russell on a 144 tick chart. Look in my data box in the lower left corner of my screen where it says risk amount, $90. We would have entered a tick below the low of that bar at 1084.7. We would have scaled out and made $100, and we would have, look how the trailing stop would have kept us in the trade all the way to here and then backing off a tick. We would have gotten out at 81.8, and we would have entered at 84.7. So that's what, 300 and some plus the $100 scale out. That's about a $400 winner right there just to get you started for your day. This is not a setup here, folks. That was not meeting our legal criteria. It would have been profitable, not much, but it wasn't legal. It was really congestion through there. As we go further, we had another setup down here. This one made a modest amount of money, about $80, because we only trailed our stop a little bit here. Later on, oops, sorry about that. We had a series of other trades. We had one right here. That was at 1045, and that was a modest winner. It got in at 75.3, and we exited the second contract at 74.7, and add 100 to that. We had another setup right here. We didn't get that, unfortunately. That was not a legal setup, unfortunately. That was right there, and it only made 6 ticks. But right here, it only made 6 ticks. It scaled out and made 50 on a scale, 50, and came back. And those were the trades for this morning. So none of these actually were legal setups. They didn't fulfill for a variety of reasons. And essentially this morning, all of the setups that we did have were winners. We had 7 setups and 7 winners. It's not always going to be the case, but I am looking to achieve an average of mid to high 70% accuracy with this system. I've had as high as 92% for a long stretch of time. It's never been below 58%. So let's go ahead and switch back now to the presentation so I finish on time. Hang on here. And there we go. Now you should be able to see the charts here. How many setups do I get? I'm being asked anywhere from 3 or 4 to as many as 18 or 20 or more. Just depends on the trending conditions. But folks, it's not so much the number of setups, it's about your accuracy. Because you can get a lot of setups and you can have a lot of losers. Why would you want to lose a lot, right? And you've asked this question before. You might have missed the beginning of the presentation. And I said, if it's trending, you can use this, not just on the minis, okay? I'm just using that as a best example in answer to your question there. All right. let's wrap things up. What I call synergistic trading is what really the TradeSafe system is. And I'm going to need to, if you will, make a quick switch here. Let me pause one more time here. I have to come back around. Well, it didn't let me. I wanted to see what my preview is. Well, I'm going to do without it. We'll just carry on. I showed you before we went to the charts how we use custom tailored cycles-based settings to create multiple time frames, multiple charts that enable you to determine the strength of the trend. And that's what informs you to choose among your tailored exit strategies so that you know exactly how to manage the trade before you take the trade. I use an analogy. Too many day traders treat it like a video game. They just want to shoot anything that moves. They overtrade and they blow up their accounts and they're exhausted at the end of the day. I take the chess playing approach. I look at the big board and I am strategic. I am thinking ahead 6 or 7 moves and I'm planning what I'm doing for the day. So you don't have to sit there all day and watch paint dry. You can get up, take a break, or trade another market maybe. This is a custom designed approach to managing your trading, allowing you to adapt to the different kinds of market conditions. Big strong trend, swing for the fences, use a long-term scale out strategy. Small weak trend, just bunt and get on base, use a scalp. And the TradeSafe system is, as you've seen by now, trend following, which historically has been almost universally considered to be the safest and most profitable form of trading. We use those cycle-based tuned multiple time frames to let you adapt, and we are keeping our risk under firm control. We do not have stops that are too tight and get you stopped out frequently. We use logical stops that let you adapt to the market. You get out when you really should get out. It's 100 or less for scale outs, 70 or less for scalping. You saw the automated exit strategy. It did everything for you virtually. There was just 1 or 2 times that I actually used my mouse, but it was all showing me where I had to go. I didn't have to make up anything in my head. I followed the rules mechanically because that's what it is, a rules-based mechanical form of trading. No discretion, no interpretation, no guesswork. And you've got precision from front to back. That's how you achieve consistency, folks. So if you decide to go forward and invest in a system, remember you're going to need discipline, because if you don't follow the rules, the system can't do its job. Too many people have tried to buy what they thought was something that would be a winning combination, and they ruined it because they had no discipline. That real holy grail is consistency, folks, not the indicator you bought, not a system. It's you are consistent. That's what enables the system to do what it was designed to do. I wonder how many of you folks have read Jack Schwager's series of books called Market Wizards. They've been around for a while. He interviewed all of the best traders that walk the planet, the ones that made hundreds of millions of dollars, and he said, what did you do that made it work for you? Well, they all had different systems, but they all said the one thing that made the biggest difference, yep, discipline. And if you're an engineer, a scientist, well, you know the importance of a feedback loop. And so do programmers. They know that classic statement, garbage in, garbage out. Well, if you want to have front-to-back consistency, folks, you want a feedback loop, you're going to need discipline. And I'm including with my platform, well, not the platform, the trading system itself, I'm including a very special performance enhancement tool. Now, you may wonder, how can I use a tool to be disciplined? Well, with my background in psychotherapy, and I've been certified in a lot of different modalities, I have discovered something that will help you achieve rigorous, diamond-hard discipline. And it's integrated into this course. Yes, this is a course, not just a system and coaching. You get all three, a course, a system, and my coaching. And this particular tool has been in use not just to help our soldiers who've come back from Afghanistan and Iraq, and it helped cure them of post-traumatic stress disorder, phobias, traumas, and things like that. That's what it was originally used for. Athletes locked in on this tool, and they use it. Half of our Olympic team was using this tool. Navy SEAL Team 6 that got Osama bin Laden uses this tool. This tool can help you achieve that diamond hard level of consistency. So that's included in this system. What else is included? Well, you're going to get a lot more than just a trading system. There's a lot of big names out there, and I'm not going to cite who they are, but you've probably seen them before. And they're going to charge you, oh, 3,000, 4, 5, even 10 grand or more, and then they want to upsell you to something else. Even if I took the least expensive of the major ones and cut it in half, the TradeSafe system, if I valued it at half of what the least expensive one would be, you're going to be able to do a lot better. Furthermore, I'm in your corner as your personal coach. You get me for over 3 full months of personal coaching at over $250 an hour if you wanted to consult with me independently. I'm not going to say, hey, just watch the videos or read the manual or something like that. I'm going to say, I'll take you by the hand and personally coach you in a weekend webinar. And I'll make sure that you know exactly how to use this TradeSafe system. And we're going to do that weekend webinar Saturday after this. I won't try to do it this Saturday. That's too short a notice for you. I want you to have some time to visit with me and make sure it's a good fit for you. You're going to get all the things I showed you in the software, from a custom workspace and charting template, the automatic trend indicator that lets you know precisely if you're in a trend or not. Even breakouts, it'll let you know when you're getting a successful breakout or is it a fake out. It'll even talk to you and tell you when things are changing. Nobody else has that. You're going to see the automation that lets you get into the trade properly. You're going to get the precision, and of course, the exit strategies are very, very automated. Now, I'll take you by the hand and walk you through 3 phases. Once you're in the course, you'll be in the trading room and you'll push buttons and learn things, master the system while you're sim trading. No money is at risk, right? Phase 2, you're going to build an authentic track record. In order to build a real track record, folks, you're going to have a statistically viable sample of 30 trades, and I'm going to sit down with you at the end of those 30 trades and monitor your whole performance, and I will build a profile with you personally in order for you to determine, are you really ready to trade live? Because I want you to be really ready when you go live and trade a real account. You'll be in that virtual trading room just like one like this, except it'll be real time. And bell to bell, a lot of people are in there looking good and saying, piggyback on my trades and no charge $200 and $300 a month. And that's almost $1,000 worth of value. When I'm there, I don't want you to piggyback on my trades. As they say, teach them to fish. Don't give them the fish. I'm there to show you how to take those trades. If you didn't make it on a given day, I record those sessions. And we've got a deep archives of hundreds of hours worth of recorded sessions, plus a lot of additional videos showing tips and tricks and other specialty items that you can choose from. You're going to, of course, get your reference guide. I give you a business plan to map out your financial goals. I want you to treat your trading just like a business. And you're going to get those feedback tools that let you know exactly how well you're performing and how to navigate and change course with your trading to make sure that you're doing it the right way. And that very powerful tool that helps you achieve diamond hard discipline is finally included. All of this, if you add it up, is well over $5,000 of value. And it's still not close to what some people will charge, and they don't even offer any of this, just their system is all. Well, I'm not going to invite you to pay this much. If I even said, I'll charge you half of it, that would be a great value, but I'm not even going to charge you half of it. You are getting a very special offer here, and it's good for 1 week of $19.95 for everything that you have seen here. And if you're a U.S. citizen and you qualify, I'm not the bank, but I have made arrangements. If you qualify, you could even spread that out over 6 months and not pay a penny of interest. This means that while you're getting up to speed, you're not paying any interest, and you could eventually get up to speed and pay back what you've invested. But that's only for those who've either sat in today or who are watching this video tomorrow, and get in touch with me, because you'll get a link to the video tomorrow, and I want you to go to my website, daytradesafe.com, ask for that free coaching consultation. No strings attached, no hype, no arm twisting, no hard sell whatsoever. The Thursday afternoon sessions, they are not scheduled anymore at this time. I'm usually in something like this instead, but I'm happy to spend time with you personally. And you're welcome, by the way, to be in the trading room. If you want to join the trading room and see how I coach, just ask for it. And one last time, here is my phone number. Area code is 512-267, and like Columbus, 1492. But as I invite you, please contact me and make an appointment first by emailing me at mguess@daytradesafe.com. I'll schedule time with you. We'll take as long as you wish. I'll answer all your questions. All I care about is that you come away feeling that you've spent your time well. You absolutely will not be hustled or hyped in any way whatsoever. So visit the daytradesafe.com site, email me, make an appointment, and take advantage of these things. So I want to say thank you very much for being here today. I've got questions that I'd like to see answered. There is the link. It has just been posted by Yana, daytradesafe.com, or you can email him. Thank you, Yana. And let me scroll back and see some of the questions that might have been asked earlier. I don't know if I can get that yet. I'm trying. Okay. And now I'm scrolling back down and seeing some of the questions. Multiple charts, 435. Not all minutes are created equal. Some have less volume. Yes, I understand that, but this is not a volume-based approach. You don't have to worry about volume. That's not in any of the 4 steps to a trade-safe trade. Let's see what else has been asked. Still scrolling. And keep typing if you have other questions while I'm going through this. Oh, a lot of people are saying very nice things. Thank you so much for that. And dollars per day, I already mentioned that at the beginning. Think of it as 2 to 4%, whatever your trading account size is. That's how much you make. And that is a maximum risk of, yes, Joe, $100 per contract, not on the trade. I don't know how many contracts you're going to trade. Will it work on Thinkorswim? To a limited extent. Thinkorswim is not a professional platform, no disrespect, but that's how the cookie crumbles. And I think we are real close to the end here. I'll keep taking 1 or 2 more last questions. Yep, there goes my alert. Just a moment. Here we go. I'm finishing on time here. Will it work in TradeStation? Okay. Oh, yes, the phone number. I will back up here so you can see that last info. It'll work in TradeStation to a limited extent. TradeStation, unfortunately, is not 21st century technology. It's a great development platform, but it has not kept up with things very well. You can't move a stop to break even in a tick automatically. You would have to do that manually, but I'd say 90% of what's there. But remember, I am providing you my indicators for NinjaTrader. It would make much more sense for you to just go with the platform that works and have it done purely automatically. Now you can try to recreate the wheel in other platforms, but I have found many people converted over and they said, I just want to use what works. And they never look back. And there's the phone number. Yana had typed that. And TC2000, no, I don't recommend that. That is not really appropriate for day trading. All right, folks, we've pretty much reached the end here. I hope you've enjoyed the presentation. I'm looking forward to you getting in touch with me. Email me first. Set up a time. Let's visit on the phone. And remember, you are getting a very, very special offer here. So thank you so much. Raleigh and Yana, thank you too for letting me be your guest today.